back to the Daily Buzz. Well, the Obama administration is cracking down on the salaries of the top 175 executives of companies that got bailout money. And they're cracking down on this. And their plan is to cut the compensation of the 25 highest paid employees by 50% and the top execs as much as 90%. Now, here to weigh in on this is our watchdog on Wall Street, Chris Markowski. Good morning, Chris.
Good morning. I'm getting used to your furniture here.
I know. We did pink.
Here.
Like I've been saying, orange is out, pink is in.
Okay.
Okay, so why are they cracking down now?
You want my honest answer?
Yes, give it to us.
I think it's politics at this point in time. I think it's a good time to grab your torches and pitchforks and go after somebody. The public is generally
But you believe this is the right thing to do?
Oh, I think that we definitely need to have some sort of reform in regards to this, and I think totally money is wasted, but I think that this is just an opportune time to go ahead and do this. I'd much rather see the administration pay attention to some of its top advisors, guys like Paul Volcker, who's been there and done that, and basically break up these big banking institutions so we don't get into these problems in the first place. You know, that the whole idea is the fact that these banks have gotten so big, so large, that they can run rampant over everybody. Now we have a time to break them up where we don't have the problems, where we don't have them trading for their own accounts and then also managing mom and pop's money, and we're going away from that. And this is basically say, oh, okay, here we're gonna mess around with a few people's salaries, but that's not gonna get the TARP money back. That's not gonna get the taxpayers' money back. It's a pittance.
Okay, you mentioned the salaries. Why do you think they're targeting the salaries instead of going attacking like the kickbacks and stuff like that, the perks? Because a lot of people are gonna be like, oh my gosh, cutting someone's salary by 90%. How's that going to affect the company?
Well, the reality of the situation is all of these large salaries that we get all up in arms about and ticked off about, this was born out of legislation in the 1990s where we said no CEO can get a higher salary than $1 million a year and have that deducted from the corporation. What that led to was stock options, perks, grants. It was just a way around it. If we just went back to the old way of doing things where, you know what, you get paid in cash and you get taxed on that, we'd be in a much better position. No matter what type of regulations or rules they're going to put forward, somebody's going to find a way around it.
And how do you think they're going to do that? Because that's what I was thinking. I'm like, okay, so what if they say we're going to cut your salary in half? You know there's going to be some way they're going to find a way to get more money.
Absolutely. There's no doubt about it. I mean, there's also limits in regards to how is this constitutional with the federal government saying, you know what, we're going to cut your salary for this. They have to agree upon this stuff. And, you know, I'm not buying it. These people are all friends with one another. They fly in each other's planes. They hang out. They go to the same clubs. They went to the same schools.
Well, you know what's unbelievable of all these companies that got this $350 billion worth of bailout money, the perks actually increased 4% over the last year.
Yeah. Well, I think that that's disgusting, but I also think it's disgusting as well as Congress is also getting raises. When are they going to cut their salaries? They keep blowing money left and right. Our deficit, $1.42 trillion for this year. Well, let's cut there too. Let's just keep the salary cutting going along if we're going to be even about it.
Well, let's keep it honest, right?
The recent uptick in the stock market, a lot of people's 401ks are still not where they should be, but now there is a group who wants to do something about it. Retirement USA in Washington met yesterday to begin searching for solutions to what they hope will be a better retirement plan. Here to explain and perhaps shed some light is the watchdog on Wall Street, Chris Markowski. Good morning, Chris.
Good morning.
All right, so let's talk about this. First of all, you know, we have had that uptick, and so people's 401ks are not at the levels that we had seen them prior to.
Some are, some aren't. If people were saving throughout the past several years, and I've said this here on the show, you're going to look back at 2007, 2008, 2009, even to 2010 as some of your best years ever if you're putting money on a consistent basis and you own good companies and good funds that are yielding dividends.
You got a lot of them for the cheap.
Absolutely. I mean, you're not only that, you're compounding those yields over time.
Okay, but some of the people who weren't doing that, they've seen their 401ks drop dramatically. So now we've got this Retirement USA. What do you know about this, and what does this entail?
Well, this is brand new, and from what I've seen in it, basically it wants to expand upon Social Security, which basically, to me, you guys were mentioning Bernie Madoff and his fondness of Columbia's finest. Bernie Madoff is a piker compared to the Social Security program. Social Security program is going to be in the red. in 2010, and they want to expand upon this.
Yeah.
I mean, it's nothing more than a file cabinet filled with IOUs in West Virginia.
Yeah, the group is made up of people from places like the Economic Policy Institute, the AFL-CIO, various other unions, basically saying that they want to make sure that this retirement savings is universal, much in the way that we're talking about universal health care.
I would absolutely love if they expanded upon various different retirement plans which gave people the opportunity to save money. If you don't have a 401k plan at work, that you had the ability to as well sign up for your own personal 401k. Right. The limits for this year, $16,500 you can put into. Wouldn't that be great if everybody could do that, whether or not they provide it for you at work? That's fantastic. Fine, give more options, but most certainly don't have the government manage it, because we all know how well they do with money.
Okay, we only have a few seconds left, but how do people best protect themselves regardless of Retirement USA?
It all depends. You got to get your financial plan done. All depends upon your own unique situation.
Okay, and you need to speak to somebody like yourself that can help you do that.
Yeah, we can get all that. You have any questions on me? Watchdog on WallStreet.com.
Are you tired of getting hit with fee after fee when you barely overdraw your checking account? I think all of us are. Well, this week, lawmakers are proposing ways to make sure banks don't take advantage of you for every little slip-up you have along the way. Now, you're looking at some of the proposed rules on your screen right now, such as requiring fees to be proportional to processing charges, warning customers if ATM transactions overdraw the account. There's a whole list of proposed rules, and here to give us the lowdown is the watchdog on Wall Street, Chris Markowski. Good morning, Chris.
Good morning.
Okay, so a lot of people have been saying for a long time these whole overdraft fees really unfair. So isn't it about time we do something about it?
Well, I'm not necessarily in the camp that I agree that they're unfair. You go ahead and you overdraft your account. The bank obviously has to basically front you the money.
But don't you think a lot of times banks want you to overdraw your account because it means more money for them?
Absolutely, but the reality of the situation is there is a cost involved with basically fronting you the money and the paperwork that's involved and all the accounting that's involved. I think keeping it proportionate is fair, but we have to also realize as well what a lot of these banks are doing at this point in time for everybody who doesn't overdraft their account, that has been current on all their credit cards and whatnot. They're now going to be getting charged usage fees. Credit cards are going to start upping the annual fees. They're eliminating various different bonus programs.
So responsible people are going to feel the hit as well.
They're going to be starting to spread the fees around so everybody gets involved.
One thing I was wondering is, you know, because they have to give you all these warnings, are you going to just be bombarded with accept, decline kind of warnings when you put your card in and they go, hey, look, if you take out 20 bucks, you're going to be overdrawn?
Can we just get rid of Windows Vista today or something like that? It's going to be all over again. Yeah, you're going to be getting all that stuff because they're not going to want to have anybody come back to them, and it is going to be a bit of a pain in the neck. You know, the other thing is you want to talk to your bank. You want to set up, rather than have a situation where the bank is fronting the money in an overdraft, you may want to have a credit line attached to your ATM or your credit account so it's not an extra fee when you do go over.
Okay, well, Chris, good stuff, and we'll see how this all plays out.